Welcome to Inevitable Wealth from Liberty One Wealth Advisors, a conversation around financial decision-making and events around the globe. In the age of instant information, level heads can be hard to find. Our hosts, Guilian DiLeonardo and Jacky Petit-Homme, provide objective and relevant insights to help you parse the data and block out the noise as you build your wealth. As managing partners of Liberty One Wealth Advisors, Guilian and Jacky look to empower you to develop an increased understanding of financial markets and how they impact you.
Hello, everyone. Welcome to our fourth episode.
Fourth episode.
Ooh, four.
Yep.
Fourth episode of Inevitable Wealth. We're looking, as always, to clear the air around complex topics, misleading headlines, things that come across your desk everyday life. So, Guilian, I thought we could talk a little bit about the search for a financial planner today. The other day, I was introduced to a prospective client by one of the families we serve. And, she's in her 60s, getting ready for retirement, her and her husband. And she candidly told me, she said, Jacky, my husband and I never worked with a financial advisor. We never thought we needed one. And now that we're looking, we have no idea what we're doing. And I literally just Googled a list of questions off of like some random website. And I said, okay, that's fine. That's good. I love questions. That means you're engaged. And the first question she asked, which I think will be the first one we tackle, she said, are you a fiduciary? And then I said, yes. But then I just kind of just let it sit there. And then she looked at me via the Zoom. And I was like, do you know what a fiduciary means? And she's like, no, she doesn't. So I just thought it was funny because that's, I think, the question we probably get the most. We had a good laugh about it, but I spent some time explaining what a fiduciary is. And you're going to come across these lists, folks, of these questions you should ask. But if you don't know the nuance of the question, you might get an answer. And she was like, listen, I don't know if that's a good answer or a bad answer because I don't even understand what fiduciary means. So I think that should be the first question we go, and we'll go through a list of these common questions and, we'll just see where it goes. What do you think, Julie?
Perfect. I can kick it off. And that's certainly the number one question that we get, right, when being interviewed is, are you a fiduciary? And I do think the question should be, are you a fiduciary 100% of the time, right? Because different institutions have different mandates and rules, whether you're a wirehouse like Morgan Stanley, Merrill Lynch, UBS, and RIA like us. Everybody has a little bit of a different thing going on. Jacky, I think you have the definition of fiduciary in front of you. Can you read that off, and then we'll kind of break it down as we go?
I did, because definitions matter, right? So this is the definition. A fiduciary is a person or organization that acts on behalf of another person or persons, putting their client's interests ahead of their own, with a duty to preserve good faith and trust. Being a fiduciary thus requires being bound both legally and ethically to act in the other's best interests.
Exactly. And I think this is how my parents raised me regardless, but the legal obligation is there anyway, right? So at Liberty One, we are 100% fiduciaries 100% of the time, right? And that's a big reason why we started this firm. So how's this differ, right, from other places? At our prior stop at Merrill Lynch, before moving and launching the firm, we were only fiduciaries sometimes, right? In certain situations, certain types of accounts. So when someone says, is the advisor there a fiduciary? The answer is yes, right? But there's a caveat, a disclosure, certain things that you can't give advice on, or, for example, mortgages, right? If you remember, we weren't ever allowed to encourage someone to go elsewhere for a mortgage, which would make you not a fiduciary, right? Because if they have a better rate, then they should take that. So there are all sorts of nuances around it. And in most cases, at a large wirehouse, they're held to a suitability standard, right? Which essentially means the recommendation has to be acceptable, not truly the number one course of action for individuals.
Yeah. And I think
Is there anything
that's
you would
also,
add?
yeah, that's what I was going to add too, because I think like the suitability standards, right, which is for all those people out there are financial planning nerds like me, and they follow the whole DOL, Department of Labor, and suitability. That's a different thing from fiduciary, right? Like fiduciary means I'm trying to make decisions for the best of my client, no matter what the outside, any outside elements, right? And suitability just means, hey, is this just a good choice, right? So, for instance, I spoke to someone a few months ago who said their prior advisor, was a fiduciary, right? They say they had to make decisions based on their client interests, but also failed to note that he won trips for selling more annuities than like everyone else in his team. And I felt like that's impossible, right? Like, how can you be objective if your next sale gets you a trip to Cancun, right?
Exactly. Exactly.
So I actually kept a quote here as well from Michael Kitces, and to put in layman's terms, right? Suitability, what did he say? He says, suitability means selling a suit that fits you. A fiduciary means that it has to look good on you too, right? So I think that's really what sums up like fiduciary standard, right? There aren't outside, I'd say, just incentives, pretty much.
Exactly.
Right?
And I think for us, to be clear, we're 100% fiduciaries 100% of the time. And anyone that anyone is interviewing or speaking to or currently has hired, right, and they're looking at about to hire us, should be asking them that as well. And now they know the full definition, and they could confirm. But you always want to make sure that there's no outside pressure, no cross selling. Unfortunately, I saw this week Bank of America got a $250 million fines and penalties for a series of things, right? But it essentially comes back to that cross selling that led us to leave, right, and then start something that was truly objective, 100% fiduciary, 100% of the time. So I think that buttons that up. I've one more in front of me. How are you compensated, right? I think that's a very common question that we get pretty regularly. So Jacky, how would you say you're compensated?
So there are a million ways, right? Different structures in our industry. For us, when we built the firm, we want to make sure our goals are aligned with the families we serve. So typically what that looks like is a percentage cost tied to your assets under management, where when you do better, we do better, right? Our structure is very direct. It's a line item on the statement, and that, like I said, I don't think that's the only way, right? And we should probably disclaimer this at the top, Julian. This is just how we do things, right? When we answer these questions, there isn't a right or wrong way. There's a fit for everyone, right? So, but basically, back to this, the compensation piece, you should be very aware of how someone is compensated that you work with. Speaking of that, I talked to someone who said, hey, they don't pay. A person mentioned that the advisor doesn't get paid by their client, the insurance company does. But then when you think about it, where's the insurance company getting the money to pay the advisor? You want to guess where that money comes from? Yeah. Commissions, right? Commissions and fees.
Yeah. You see that a lot with the whole life insurance, and they say, I don't pay my advisor, somebody else does. But where's it come from? It makes no sense. Let's use critical thinking, just one more step,
Yeah. No one works for free. Like, no one works for free, right? If you don't work for free, you probably shouldn't believe someone else works for free. But basically, it's a lot of these, there's a company that had mutual in it, and the advisor told them, like, yeah, you don't pay me, like I get paid by my company. But then we kind of took a look at the statement, and they had a ton of A shares, right? And A shares, for those who are not, who don't know what that means, are mutual funds that have like an upfront cost, right? Some could be as high as 5%, down to 2%, really depends. But that upfront cost, that 5%, shares, like the advisor gets a piece of that, and that's literally what that is for. So then again, is it wrong? Is it right? It depends on how you feel about it, but you just need to understand that that's how your advisor gets compensated. Because then if they say, hey, you get your upfront fees here, but that's all they get. But if the advisor's calling you every month to buy different mutual funds, maybe that might give you a clue like, hey, okay, are they being a fiduciary, right? Are they just making me buy more different mutual funds for those fees, or is it the right thing to do? So
I'll be forward. I think mutual fund A shares are criminal, right? So A shares are a structure of mutual fund. They made a lot of sense in the past, right? Before ETFs were created and widespread and easy to access. But now, there's no reason anyone should be paying 5% to buy a basket of stocks when they could pay, 0.04%, right? So I don't even know what the division is, right? But like 100th of no, more than that. So it's outrageous. So we strongly encourage ETFs, right? They're cost effective, tax efficient, and transparent. So you always want to know what you're buying and why you're buying it. A lot of different models work, but some things, right, do tend to be outdated, and you want to make sure that you're not thinking too far ahead, right? Because we don't want to be in, deep in crypto with 100% of our dollars or anything like that. But you also want to continue to progress with society, right? And stay away from things that don't make sense anymore. That's my not that hot take. I think that fits. What other questions do we have here?
I have one here, which I always wonder why folks ask, but I guess it's a good question. It was on almost every list. It says, how big is your firm? So yeah, go ahead, take it away, Julian.
We're coming up on 100 million under management. We work with approximately 150 families, right? So for us, our goal is to be very hands-on, very proactive. So we have less than 40 families per advisor, which is a really good fit for us as we look to make genuine connections with people, right? Places like discount brokerages, your Fidelities of the world, they have up to 300 clients per advisor, and that's totally fine for them. It works for some folks, but that's not the model that we felt was best for our clientele. Lately, actually we've been adding a handful of folks here and there. We've gotten, the highest compliment we could get, which is essentially referrals of friends and family from the folks we work with now. So that's been really, really fantastic. And as that continues to happen, we'll of course add capacity so that we can continue to be extremely hands-on, extremely helpful to friends, family, children, etc.
And I would like to add the woman I spoke to that was going through the list, who basically spawned the idea of this episode. When I told her basically verbatim, like, 100 million, 150 families, and she was like, "Is that good or bad?" And I said, "It's neither. It's just, well, what do you prefer?" I was like, if it's not already obvious, I'm a huge people person. It's one of the biggest reasons I got into this. I like my clients. I look forward to talking to my clients. So I can't talk and know my clients if I have 150 relationships. I can't do it. So we made a business decision to be less than 50 relationships each planner, because then we can have that relationship and we know our clients, we know how they function. And when things happen in the world, I know exactly who I need to call because I know exactly who's going to react and how. So that's it. I don't want to take too long on this question because we have like a few more left here. The next one, what is your investment philosophy? Ooh, can I take this one, Julian?
Yeah, of course.
Because it's an uncommon answer, but we're very boring. Investing shouldn't be fun or cool, right? That's how people get themselves into trouble. We've seen the data, it's out there, right? A smart allocation will get you where you need to be. So we're very just rules based here, right? We already mentioned we do ETFs, they're tax efficient, they're cost efficient. And we just put together a disciplined strategy that's based off of your goals. And then we throw a little bit of rebalancing element in there based off market triggers to take advantage of volatility. So, you know, we try to basically control what you can control. You can't control the markets. You can't control what interest rates are doing. You can't control what's happening geopolitically. You can control your risk, right? Which is your allocation. What percentage of your portfolio are in stocks? You control tax, right? What will be the tax repercussions of your investment strategy? And then you could control cost, right? What is the cost of these investments, right? Back to the mutual funds. Do you have a 5% upfront fee or internal costs that eat into your performance? So that's kind of my thing. And people always like get their eyeballs open when I say boring, but you want your investments to be boring. If someone is a fiduciary, right? They're not trying to like invest in what's hot and what's great and what's new. They want to make sure that they're investing for you over the long term, something that's fundamentally sound. I cannot remember who said it, but they said investment shouldn't be entertainment, right? If you want to be entertained, get a pet or a sports car. And like, that's exactly how I feel. Anything to add to that, Julian?
No, I think it's perfect. We control the tax implications, risk, and cost. And years like last year, we're doing Roth conversions, right, to be tax efficient and allocated appropriately, right? Whether it's taxable account, pre-tax, whatever it may be. And our clients live complex lives, right? So why do we want to make that more complex? We want to try and simplify things as much as possible for them to help solve the problems, not create more.
Good point. And also back to fiduciary, small note, if you're engaging with a financial planner or financial advisor and you ask them about their investments, if they don't know anything about you and they're already put an investment strategy in front of you, they are not a fiduciary, right? You cannot recommend investments if you do not understand the client situation. So if you talk to someone and they don't know anything about you and they're already talking about investments, that is a red flag.
Exactly. And to add to that, we also have families where the two partners, the husband and wife, in a case I'm thinking of, have different risk tolerances, right? So you never want to put the cart before the horse, never want to start making recommendations without understanding the full family unit, right? Because everybody's different and one might be more comfortable with more cash on hand and one might want to be, full throttle, all stocks, 100% equity. And you want to make sure you're listening to both, understanding them, and making recommendations after the fact. Once you know them, know their kids, know their kids' names, not just 10 minutes into a call, you're rolling forward.
Yeah.
I think that takes us to the next one. Do you work with the whole family?
Yeah,
and I'll take this one.
Yeah, take it away, Julie.
Yeah, we do. We absolutely do. And we have a few different clients that we work with that are next generation. Regardless of whether they fully hire us or not, we're always happy to help children of clients, right? Friends or family, whether it be one-off questions or a full financial plan. It can be hard, right? For a mid-20s, young 20s. We've spoken to 18-year-olds at points, 35 and up, of course. But it can be hard to kind of navigate the best next steps because there's advice coming from 40 different directions. You turn on TV, a lot of younger folks are on Robinhood, and you want to make sure that they build very strong habits early, right? Because habits essentially dictate how things turn out. And for most of the families that we serve, while the children have a great head on their shoulders because they are doing the same things as their parents, it can be a little bit harder for a parent to get through to a child, right? Than their child than it is for us, right? Because who wants to listen to their dad? It's like I got it, I got it. So it's one of those things where a second voice always helps.
Boom, nailed it. Moving along, what kind of people do you normally work with?
So I think I touched on this a little bit before. We have 4 CFPs here, and then we have the Charles Schwab back office, of course. But for us 4, I think we all have a little bit of a different clientele going on. But the baseline similarity, right, is that they're busy people, they have complex lives, and they want simple solutions. They want to offload the mental headache. They want to be able to stay consistent in their investment strategy. They want to know that they're taken care of 365 days a year, right? And I think that's something that we of course help with. But at a baseline, they're busy people. They don't have time necessarily to watch the market day to day and worry about that. Is there anything you would add there?
Yeah, I think you pretty much nailed it. I think that is the bottom line. And also just there's some folks, we work with a lot of like very smart folks that probably know a little bit about investing, but at the end of the day, it's like, you have your job, you have 40 hours or plus, you have a family. God forbid you want to have a life and have leisure activities, right? Folks, a lot of the folks that work with us is they just take that off of their table and put it on our table. And, we're, like we said earlier, more proactive. So if there are things that they should be worried about or thinking about, that's our job to reach out to them and put it in front of them. But you summed it up pretty well. I'll this next question, you can answer this one too, Julian. What are your personal or firm values?
So for me, right, and I think it's just easier to answer from that direction. So my dad, for example, just celebrated 45 years with the same company on July 1st, right? So very recent, 45 years. You don't really see that anymore. So congratulations to him. When he listens to this, he'll be very excited to get a shout out, I'm sure. But that level of loyalty, dependability is something that I look to emulate, and I look for the firm to emulate. He always says, how you do one thing is how you do everything, right? So in addition to the loyalty and dependability, I'll add that we have a high emphasis on attention to detail, right? How we do one thing, whether it's, printing someone's investment strategy out, to, how we're going about actively investing in everything we do, trades, pricing, et cetera. As you can imagine, right, that emphasis on attention to detail really matters in the financial markets. So for me, I really strive to have that high degree of dependability, consistency, and attention to detail. And I think we've built that up over time to be pretty strong with what we're doing day to day. What would you add to that?
No, I mean, I think you took care of it. I think, yeah, for us, our goal is to be effectively in a long-term relationship with our clients, right? So that means just a long track record of trust and consistency, and being able to be a trusting sounding board for those families that we serve.
Exactly. I think another common question we get: how will we work together, right? How does this work, right? Whether they didn't have an advisor before, or they had an advisor that maybe they weren't clicking with as well. So how would you say Liberty One Wealth Advisors works in your view?
For me, which is also a good question, and also I'll do a disclaimer: this isn't a one size fits all. This is just how we operate. We are pretty high touch, I'd say. For personally, if I don't speak to or hear from a client past 60 days, I'm like, hey, what are they up to? And I might reach out to them. But for us, it's really about making sure that we are aware of what's going on in our clients' lives, right? And the reason I say that is I was speaking to someone and they mentioned that their prior advisor, they spoke to prior advisor once a year. I was like, once a year. And like I don't want to shame anyone's strategy out there, but a lot can happen in a year, right? A lot can happen in a month. And if someone is in charge of your financial care and you're speaking to them once a year, I mean, I don't know how effective you can be, especially I don't know how you could be a fiduciary, right? Like if you're running an investment strategy, if you're rebalancing, you're doing all these things for your families and you only talk to them once a year, I wouldn't be able to handle that myself personally. But for us, like I said, we're back to our process, right? We have 50 relationships or less. So we are pretty high touch. We do semi-annual reviews. So we have our big major reviews twice a year. typically April and October. And then we do quarterly reporting. And then also, because of who I am as a person, I like my clients. If I haven't heard from them, I don't know what they're up to, I call them, hey, what are you doing for the 4th? Oh, that's cool. Oh, your grandson's visiting? Awesome. So that's just kind of like how we work. Yeah, I mean, I could kind of talk about this one all day. Julian, what are your thoughts there?
I think you nailed it. You know, that's the best part is getting to know the people we work with and helping them solve their problems, right? Because that's the most rewarding aspect, the most fun part. So if you really don't know someone like you referenced, it's you know, your day to day is a lot less exciting, right? So I know when we have these goals, you know, we just helped somebody retire at 55. Yesterday, I helped one of our younger clients pay off $80,000 in student loans, right? And how we strategically went about that through the market, you know, with the uptick this year, as well as diversifying from company stock and whatnot. So those are the most rewarding days, right? And you want to make sure that by being engaged with the folks that we work with, you know, we can do the best job possible. And that's really what it comes down to, is consistent communication and really being very proactive in how we operate.
Good point. Well put. Here's the next question. What other services do you provide to clients like me?
So I could take this one. We've been a resource for almost anything that's to do with the dollar sign, right? We're the quarterback. If it's a complex strategy, we know enough to be dangerous, but we are sure to loop in experts, right? So complex tax situation, we incorporate your CPA or a CPA that we can refer. Same with complex estate planning needs. So we just want to make sure that we are essentially covering all the bases for anyone in their different type of situation. The overall view, right, can be summed up, and we took the CFP. There's 6 pieces to the CFP, and a few of them are in here. We can sum it up: basic pillars of financial planning, investment management, retirement planning, tax and estate planning, cash flow and budgeting, insurance, stock options, etc. Etc. is similar to, I've said it before, Jacky, you helped somebody buy an RV, you know, last year, right? And if you remember, it's not a house, right? So you can't get a mortgage, and getting a car loan is difficult because it's an RV. So it falls under, you know, it's kind of a no man's land. And really anything we can assist with, if we don't know it, we'll look to get the answers. With that, we also work with, you know, about 150 families. So if there's ever a situation that we're less familiar with, you know, I would ask someone their permission. You mind if I ask, you know, one of the other families we work with, they just went through this, or they work with a company that can help with this. So not only do we know a lot of information, but we also work with very smart, intelligent, driven people who could be resources as well for each other as a community. Yeah. What would you add to that?
Yeah, I mean, that's pretty much sums it. And also adding resources to add more services, right? So like we're currently evaluating like this pretty cool interactive estate planning tool that seems pretty fun to help families we serve, right? Really get a good visual of like what their estate plan looks like. Actually, I don't even know if I'm allowed to say that because we haven't cleared it yet, but it's already out there. The people know.
Yes.
But we're always trying to add ways
to do, right? Everybody, and it's common, dragging their feet on getting a will done because it can be a little bit morbid at points, right? So we just want to eliminate friction, make it seamless for folks to get that done. So we're looking to roll that out soon, but you know, we'll keep it buttoned up for now. You know, leave everybody wanting a little bit more. I have, I think, one more for you. So, what investment benchmarks do you use?
We get this question a lot as well, and I also give a very a not typical answer. We don't use any traditional benchmarks. Zip, zero. Julian, ask me why.
Why?
Because, Julian, we're not competing with the market. We're not a hedge fund, okay? We're not, trying to bring everyone. I mean, it'd be wonderful, but like for us, we compete with our clients' goals at the end of the day, right? If you want to compete with the S&P 500, buy an index fund and save yourself the stress, right? When a client receives their first financial plan with us, that's what's going to give us their benchmark, right? That helps us calculate a target rate of return. And this is the figure that person should be worried about. It's just, for me, it's, a lot of folks get this FOMO because they hear about, someone made, not anymore because we're in a crypto winter, but someone making all these rates of returns and all these things. And that rate of return should mean something, right? It should be, okay, if per my goals, right, I need 6% rate of return to exceed what I define as financial success, then our job is to beat 6%. Now, that is pretty much like the simplified answer, but a lot of folks out there, they compare the S&P 500 or the Dow or the NASDAQ, and you're not invested like that, right? The NASDAQ is tech heavy. The S&P 500, I mean, historically is basically usually carried by like the top 10% of stocks. So those indices, which are helpful to see what the capital markets are doing, really doesn't really apply to your financial life, if that makes sense.
To piggyback on that, you mentioned the Dow Jones. Anytime, right, it's a good day in the market or bad day in the market, and you turn on CNBC and they tell you how many points, the Dow Jones is up or down, right? It's way more common when it's down because they want you to keep watching. Be aware, right, that today the Dow Jones is at 34,447, right? So when they say, a lot of times they'll say, oh, it's the worst day since, 1940, right? And that's because in 1940, the Dow Jones was, I can't even find it here, or whatever year, we're going back to 84. It was at 1,132. Now it's at 34,000. So always be aware of the context when you're looking at benchmarks and what they're trying to convey. So I know that's a little bit out of left field. Dow Jones is my least favorite index. I understand it has historical precedent, but it's not made up of all that many stocks. It tends to be value heavy. And frankly, I think it's used deceptively in the media because of the structure and point structure. So I will end there.
No, it's a good point. The market was up like 1.5% the other day, and the Dow was flat or down, and they only talked about the Dow. So I agree, Julian.
Fraudulent.
Fraudulent. Yeah. So did we do everything? Oh, there's one more here, and we'll do this really quickly. Do you work with CPAs or attorneys? And I think Julian, you mentioned that. I'll knock it out because I wanted to keep this one short. Of course we do, right? We can't be the CFO of your family if we're not collaborating with those other, specialists in your life. So there either be CPAs, estate attorneys, or any other attorneys or folks that are in your life. We collaborate them to make sure that we're all, that cabinet that your brain trusts, if you will, and making sure we're doing the right things for you. I mean, that's pretty much it for questions. Julian, anything else? Any other questions? I think we got everything on the list here.
No, I think that covers all the bases. Hopefully we helped answer some of the questions and add some value in terms of everyone's understanding of what the goal of the question should be, as opposed to just, saying the word fiduciary and they say yes and we move on. And I do think we have, families that hired us 7 years ago that might be wondering what our answers are to these questions, and they're very comfortable and trusting of us, but we always want to be transparent, forward thinking, and proactive in how we're helping people, right? So it's been a great, probably like 30 minutes now. I'm not quite sure. So if you made this far, thanks for coming. And then anything to close out, Jacky?
Nope. If be safe out there. We got a hot summer. Stay cool and stay safe, and we'll see you on episode 5.
Yeah, and call us. Well, let's check in. Give me a call, or I'll call you. Either one.
Yeah. All right. Take care, everybody.
All right. See it.
Liberty One Wealth Advisors is a registered investment advisory firm located in the state of Pennsylvania. Any options expressed are derived from sources generally believed to be reliable and are provided for informational purposes only. It does not constitute any form of advice or recommendation to buy or sell any securities, adopt any investment strategy discussed, or invest in any specific product. Nothing contained in this podcast constitutes investment, legal, tax, or other advice and is not to be relied on in making an investment or other decision.